Pat Keown, a research analyst with Thomson Reuters Lipper, and I'm here to speak to you about the fund flows activity for the week ended Wednesday, January 11th. Let's start by taking a quick look at the market activity for the week. The S&P and the Dow managed to eke out small gains each. The S&P was up 0.2%, while the Dow Jones Industrial Average was up 0.06%. But some analysts are thinking that the Trump rally may be coming to an end, as they view the market as overbought, and it may be some time before the Dow 20,000 threshold is reached. Let's move let's change our attention back to the fund flows activity now. We'll start by taking a look at our macro groups. Equity mutual funds saw outflows of $916 million last week. Taxable bond funds took in $1.7 billion in net new money. Muni bond funds had inflows of $790 million, and money market funds saw $21.1 billion leave. Let's take a closer look at our equity mutual fund group now. The $916 million in net outflows was once again dominated by domestic equity fund activity. The group saw $1.3 billion leave on the week, while conversely non-domestic equity funds took in about $357 million. This trend goes all the way back through last year. Domestic equity funds saw outflows of $228 billion on the year, while non-domestic equity funds had a much smaller outflow of just $27 billion. In last week's activity, the largest outflows among domestic equity funds were large cap growth funds and multi-cap growth funds, which saw roughly $900 million and $500 million leave respectively. And on the non-domestic equity side, international multi-cap core funds took in about $450 billion in net new money. Let's move on to the equity ETFs now, take a closer look at them. For the week, the group took in $3.3 billion in net new money. It was the third straight week of inflows. The largest inflows belong to PowerShares QQQ at $639 million, and the iShares Core S&P Mid-Cap product took in $621 million. The largest outflow belonged to the SPDR S&P 500, which saw roughly $4.5 billion leave their coffers. Moving on now, let's take a look at the taxable bond fund group. We'll start with the mutual funds. The group had $1.7 billion in net inflows last week, their second straight week of inflows. The largest inflows belong to funds in the core bond funds group and the loan participation funds group, which had net inflows of roughly $850 million and $800 million respectively. The loan par funds group has been on a pretty good run ever since the election. They've taken in $6.6 billion since then. And they've benefited during this time frame. They've benefited from the rising interest rate environment we're currently in now, as they are floating. Most of them are floating rates. It's an advantage to them, as well as they benefited from the surprise election of Donald Trump as the next U.S. president, as his campaign promise of less financial regulation will benefit the bank loan industry. Let's take a closer look at the taxable bond ETF group now. Inflows here as well, $2.2 billion on the week, their third straight week of inflows. The largest ones belong to the iShares iBoxx High Yield product at just short of $300 million, followed by the iShares Core U.S. Aggregate Bond product, which is about $259 million in net new inflows. The largest outflow belonged to the iShares 7 to 10 year Treasury product, which saw roughly $300 million leave. Let's move on to our next group to take a look at now, municipal bond funds. It's a big week for muni bond funds last week. They broke an 8-week skid of outflows. They took in $790 million in net new money last week. During their eight weeks of net outflows, they lost almost $17 billion from their coffers. They, conversely to the loan par group, they were hurt by Trump's election. His campaign promise of reducing the top federal marginal tax rate will lessen the value of the tax-exempt benefit provided by munis. This is one of the things that's hurt them over the last couple months prior to this week. In last week's activity, we see that the high-yield muni debt category responsible for almost all the net inflows, as they took in about $770 million. Our last group to take a look at is money market funds. Again, as mentioned previously, large outflows for the group last week, just over $21 billion. One group accounted for the lion's share of this net outflow. It was The institutional U.S. government money market category saw about $18.6 billion leave. Well, that wraps up this week's report. If you'd like to take a closer look at the data for yourself, please take a look at our website at www.lipperusfundflows.com. And please join us here again next week, where another one of our analysts will be speaking about that week's fund flows activity.